What's going on, guys? This is the Serial Trader. I'm back with another video for you guys. I told you guys I was back, so we're gonna see more videos. Alright, so the topic of today's video is gonna be how to do basic analysis. Right, so I'm gonna show you guys how to do basic analysis so we can go to the advanced stuff. I mean, we're gonna do basics, intermediate, and then we're gonna do advanced stuff. So we're gonna get on the charts and then I'm show you guys what's going on in the charts. All right, guys. So this is how you do your analysis, right? So you're gonna go to the higher time frames. The most important one is the daily. I look at the weekly too. Like right now, I'm looking at the weekly. The market is strong. We've been bullish for a long time. We're gonna be doing a retracement very soon. Like we could see something like this, and then we go back up and take out this high. I really think we're gonna see new highs this year. But yeah, that's not what you came here for. All right, so you will go on the daily, in my previous video, I showed you guys whenever the market is doing higher highs and higher lows, that's when we're bullish. Whenever we're doing lower highs and lower lows, that's when we're bearish. Like I showed you guys, this is bullish, and the other way around is bearish, which means the market is going down. So in this chart, it clearly shows we're going up. And the daily, it kind of look like we're going up, like straight up. Okay, so now we're going a lower time frame, which will be 4 hour, where you would see the trend a little bit better. Like you see this, like we super bullish. See? So we made this low, low, low. See, we keep making higher highs, so we clearly bullish, right? So the most important thing here for you to look at is the major highs and the major lows, right? See, this is a major low. See, major low, and this would be a major high. See, you would do all these. These are very important to know for now. So you will be looking at these areas, right? Right. Let me delete them. So all of these are different ranges, right? So from here to here, when the market retraced, that was a retracement. That's its own range, but we bullish, so you will be looking at this range, right? And then we use something called Fibonacci. So we're looking at this range right here, right? That was way before we went back up, right? We had this range. So market got here, and then the market was doing a retracement, right? So we have this whole range. So we use something called Fibonacci. So what the market makers would do whenever the market is going up, you will see a deep pullback, right? A deep pullback. So we use the Fibonacci. So you would measure the whole range, right? This is the whole range before all this pullback happened, right? So we have this pullback, and then you're going to be watching under 0.5, which would be discount. So yeah, this whole range, right, before we had that. So we have this area. So this is the 50% of the range, right? I'm going to make it a different color so you got it. So it could be noticeable, right? So anything over that is premium, and anything under that is discount. So you will be looking to buy under the 50%, and you will be looking to sell above the 50%. Are you guys following me? So I'm gonna remove this range so you could really see. what I'm saying, right? So this range happened. When this range happened, right, you don't have no information, right? So market started going down, right? Right. So you would not be buying until the market drops under 50%. It's like you go to the market, right? You're gonna be looking for a discount to buy. So it's the same thing for the market. You buy low and sell high, right? You sell high and you buy low. All right. So you'd be looking to get in under the 50%, right? And you see the market just kept going up, right? All right. So okay, so I'm gonna show you guys how you know the market is bullish without no indicators, right? Price is bullish. Okay, so we're gonna go from where we bottom, right? So this is on the daily, so it could look a little clearer. Okay, so okay, so you reading price, right? So you got this major high, this major low, right? This is the last range before we went and make the last low, right? So you looking at this range, right? If you bullish, you looking to buy under there, right? But the market was bearish at the moment, right? Because we was making lower lows, lower lows, lower highs, lower lows, lower highs, right? So after we broke this range right here, right? So we put in a new low, right? And then this low that came didn't break that low, right? So whenever if we were very bearish, it would break it and keep moving all the way down. It would just go deep, but it couldn't break it. It failed to break it, right? So now we have another high. And all this is the same on every time frame, but the higher time frame give you a better direction of the market, right? And then after we put in this new high, we broke it. So you call this change of character or market structure shift. So MSS or change of character. All right. So market structure shift or change of character. All right. So after we broke this, we're gonna move this so we don't get confused. See, after we broke this high, now we became bullish as long as we remain, right? We did not break this range, right? So we're gonna keep going up from there. And then you saw how we kept going up and we never broke. Every time we put in these lows, we never broke them, right? We keep going higher and higher. And then we went for that liquidity. That's why we kind of pulling back a little bit, right? Okay. I guess you guys understand change of character and also how I talk about how to identify how the market is bullish. So you'll be looking at the daily, right? So you'll be looking at the daily. And after you see that structure shift, so we're gonna put this line right here so you can see it on the other time frame. So you'll be looking at moving down to a lower time frame, right? And then the market creates this other range, this new low in the lower time frame, right? And then we broke it. This is a liquidity grab. So this is the difference. So we see the market drop, and then that low that the market created, it broke it, but it's a false breakout. Why? Because the market didn't keep going down like with strength. It just grabbed the liquidity because we had people that was buying here. They thought it was the bottom, right? But smart money went and took out their stop loss, and then that's when we had this huge move, right? So when we're going up like that, anytime after we broke structure and the market looks bullish to you, according to your analysis, so anytime the market drop, you be looking to buy. Any drop, there's an opportunity for you to buy, right? As you can see, until we change character. All right. Okay, so this is what you will be looking for. You will be on the higher time frames. You know we bullish, right? So you're looking for buyers. So now the market is all the way up. We in premium, so you will wait for a deep retracement for you to take a trade, right? So let's see what happens. So you will play this, and then oh yeah, I forgot to show you guys. So you would add your fib, right? So we use this. We would use the latest low, right? So you will wait to see how price react under the 50%, right? See, we strong right now. And then you would go on the lowest time frames, and then you would look for weakness, right? And then also you would look for a little change of character on the lower time frame, right? See right here, we have a market structure shift, right? The same way you use your 50%. Sometimes the market, like, it's a lot of different areas. I'm gonna show you guys how to take trades of them, because the market would react to the 50% in the higher time frame, but in the smaller time frames, sometimes it will not give you the opportunity because they dump in the orders so fast, right? See, but we have an opportunity right here, right? I'm tripping, right? And then this is the 50%, right? See how the market dumped a little bit below the 50%, right? And boom. So you will, like, this was so small, so you will have to wait for it to deep retracement, right? And then see, your trade will be here. So it will give you entry right here. And then boom. Look at this. Huge move up to the upside. And look again, another entry after we break structure again, right? Like, these are the high probably trades. Like, you get big rewards on these trades. See that? In this area, it's a fair value gap. So whenever you see an area where the market didn't close, the market just left a candle and it leaves that space, this is where the market will find support, or sometimes it would act as resistance. Support is wherever the market stop, like, bottoms before it goes higher, and resistance is where it tops. So this area, the market will use it. It's an inefficiency. You see how all these candles don't have no spaces? The market will come back for this gap. We call it fair value gap, right? And then look what happened. It dipped under the 50%. See, but you will be looking at this fair value gap. So your entry will be in the middle of this fair value gap, and your stop will be under that candle that created it, right? And could you notice how it respected that fair value gap? And look at this big candle, right? I think I'm giving you guys too much in just that one video, but yeah, you guys get the idea. All right, I think that's it for the day. We'll come back for more in-depth informations. All right, guys, that's all I have for you guys today. tune in for the next video and subscribe, like, and share the video. All right, see you soon.